Oh, the shark has pretty teeth, dear.
Happy Tuesday. How you doing out there? Hope you're having a great day so far. I cannot get used to this time difference, by the way. It's like dark. It's not supposed to be dark. It's not time yet, but not until it gets colder. We're here in Florida, and so it's not really that cold yet, although I hear tonight it's supposed to be cold. Welcome to the Closing Beat. We're financial advisors here with Jazz Wealth. We bring this show to you every day. Go over the stock market, the good, the bad, and the boring, which is what we'll cover today. And then we'll take a shot, try to answer your questions here at the end. We are also playing a game. If you want to guess the Dow, it's free. It's fun to play. There's no strings attached, no games being played there, just your game. You go guess where the Dow's going to close next week. If you're the closest without going over, we'll send you a $100 gift card or credit your account $100 if you happen to be one of our customers at Jazz. Do hope you'll keep us in mind here at Jazz. We love working with investors of all sizes, and our goal is really to teach along the way too. We like people to sort of learn not only about their investments, but also personal finances and, debt, and their dough, all that great stuff. Let's get started here. We'll talk about the stock markets. Pretty quiet day. The Dow was basically flat. It was flat. The S&P added 4 points on the day. The NASDAQ added 21 on the day. We actually started higher. Actually pretty good. If you look at the S&P 500, we started up against the what people are looking at as the resistance area here, 3,100, right? So we bumped our heads right up against 3,100 here today. Just couldn't get anything done. We were higher to start the day. Everybody was waiting for the president's speech at the economic conference there. And we even had a small little rally going into that announcement, but, it just wasn't anything new. Traders were looking for something on trade. We didn't find anything new there. Trump tried to maybe change the topic a little bit by pushing back on the Fed, saying he wanted lower rates and actually negative rates. And, people just didn't see anything new or positive that came out of that. So we sort of sold off through that conference and into the rest of the day. Got a little bounce at the end of the day there. All in all, basically a small range day. It's kind of like, sort of a tight little narrow range day there. And so the boringness, the low volume kind of activity continues here. So that's what you have in the S&P. NASDAQ hit new record highs there. Also same sort of performance throughout the day. And the Dow, same thing, although it didn't quite. Did it make new highs? I don't think it made new highs, actually. So you got lower volume out there. You got today, if you look through the general breadth of the market with the S&P, you had more stocks lower on the day than you did higher. It was just kind of a tug of war kind of a day. We've seen a few of those here as we've gone. The 10-year, the 2 to 10-year spread, that inversion that everybody was talking about, we're almost back to where we started in July when the rates, the spread started tightening up. We've got the steepest yield curve. The yield curve at the moment is as steep as it's been all year, as rates just keep plowing higher there. And so that's pretty much it. We talked about that yesterday in terms of the REITs and utilities and why they're underperforming. Showed the chart of the spread versus the rates, REITs and utilities and things like that. So that's basically it. Market-wise, we're sitting at highs. Nobody's really paying attention. Everybody's pretty much fat and happy at the moment because the markets are sitting at highs. Not much to go on there. If we look around some of the different sectors here, you got REITs headed back down to the 200-day moving average. We talked about this yesterday and for the past few days and weeks actually, how we've been just selling off, pulling back in kind of that all that steam is coming out of this sector for the moment, people taking some of the profits, moving them into tech and elsewhere. Bonds remain oversold in the short term here, whether you're looking short term or long term. Just couldn't find any buyers today. It was a bit of a larger range day than we've seen, but for the most part, you got a little sell-off here, and unlike last time, nobody seems to be coming around to try to buy these things here, so a little bit quiet there in terms of bonds. Healthcare remaining really strong there, almost back to highs as well. Healthcare, we've been pointing it out as it's getting stronger and stronger. Try to show you that. I think that was your best performing sector for the day. In fact, it was. Yeah, 0.6% gain on the day there as well. I thought I'd point out communication services. They're the latest to try to hint at a possible breakout. Remember, this used to be telecom. And so just tightening up here near these highs, refuses to pull back at the moment, sort of giving you that hint that maybe this will be the next area that wants to break out. Oil still can't get over the 200-day moving average. We've been kind of joking about this here, just back and forth. And a lot of people say, oh, technical analysis doesn't matter. Fundamentals are where it's at. And then other people say technicals are where it's at and fundamentals don't matter. Well, with the price of oil, if you happen to trade oil futures, crude oil futures, light sweet crude, very technical in nature, and so they do participate with a lot of these technical resistance and support areas that you might find in different patterns and things like that. We kind of highlighted support down here. Now it's stuck at the 200-day, just can't seem to get anything done there. And once again, you did not have any one sector up or down 1% or more. That's 2 days in a row where you're looking through the different sectors in the S&P. It gained 0.6% on the upside, lost a little bit on the downside, but no 1% plus or minus move showing up there in the overall market. So we'll move on to stocks. Let's talk about some stocks today. What are you guys looking at there? If I look at Disney, we'll start with that. That got a little excitement today because Disney Plus goes public for the first time here. So I've been seeing a lot of social posts today, people on there playing around. The media made a big deal out of some glitches. I didn't see any real posts. I mean, on Twitter, there was some things, but probably to be expected. You know, you open the floodgates there, you're going to have some few hiccups there in the first day. Nonetheless, the stock was higher by 1.3% on the day. They have spent $3 billion on technology and content to get Disney Plus to where it is today. So you're going to bet that they're hoping this is a success. Netflix was just a touch lower on the news today, just all the attention focused on Disney for a little bit, wondering about how they're going to be able to compete. So that's what you have. Advanced Auto Parts beat on earnings today. Revenues came in basically as expected. Same-store sales was the negative there. Everybody's looking at same-store sales and their guidance for same-store sales going forward. Sales were lower by 1.2%, and they guided towards the lower end of that range going forward. So they tried to get everybody to just calm down a little bit. We're not going to be as strong as you guys are expecting. They also said they're going to do $700 million additionally to their share buyback, putting them well over $1 billion at this point. So Advanced Auto Parts a little bit, actually down by about 7% on the day there as they lowered their guidance. Dr. Horton, this is a home builder. DR Horton is the stock there. I call it Dr. Horton. Went to new highs. Really good earnings report in terms of what they talked about there. They beat on earnings. Revenues are better than expected. They just went crazy with the outlook. Raised their dividend 15 cents. Now they raised it 17.5%. So home builders doing well with these low interest rates. Remember, Pulte Homes reported last week, and they had a great earnings report as well. Stock obviously doing well on the day, but Dr. Horton got all the attention today with the gap higher and a 3% gain on the day. Facebook, higher on the day, 2.5%. I swear to you, I had no idea. Remember yesterday I said, you know, this is how China does people buy stuff in China through the apps and stuff. And I was saying, like, we're going to figure it out over here. I had no idea that they were going to announce this today, but it was so weird. Facebook announced that they're launching, I think it starts today, actually, on Facebook, if you're looking around for it, Facebook Pay, right? So you can transfer money and buy and sell stuff through the apps instead of using your cards and things like that. So if you feel secure about all of that, that's going to start on all their platforms, Facebook, Instagram, and WhatsApp, although I believe Facebook Desktop starts today or tomorrow, sometime this week coming up here. So they announced that, and the stock was a little bit higher. Rockwell Automation, great day for that one, up 10% on the day. Just a good earnings announcement, really. The CEO got a little bit of the attention if you follow like the conference call there. Basically, they were saying that they've been cutting costs, and that's been something that ate into their earnings going back a year now. And they said, we're cutting costs, that's all successful, and that cutting costs has allowed us to invest in some of our more growth-oriented areas, or growth opportunities is how he said it. So up 10% on the day, very good earnings report. If you own that one, you're happy. Tyson, also strong on the day. Remember yesterday we talked about this not being too big of a mover. Generally it's to the upside, but by a small amount, 0.12% to be exact. Well, the odds played out even better than expected. 7.5% gain on the day. Very, very strong day. That's the best gain all year for this stock. The CEO was commenting on the alternative meats. Is that how you say it? I forget how you say it there. Is it alternative meats, how they word it? Sort of weird. Yeah, momentum is gaining in the alternative meats category, and they're projecting even more strength. So they sort of raised the bar in as far as what everybody to be expecting about their plant-based meats. Is that I don't know if this actually plant-based what they're doing there, but yeah. You guys want it. There you go. Overstock down 17% today. That's a bad day. New 52-week lows. Just continuing to get crushed here after earnings and everything. Just horrible to the downside. Really interesting story. They could make a movie out of the CEO, the previous CEO on this company. You got Craft Brew. You see the tick up here? So it was down here yesterday. It's $7. You wake up, you got almost a $10 gain on the day. Being bought out by InBev, which is, you used to just call it Budweiser, but Anheuser-Busch InBev is how you say them now, German company. So they are buying out Craft Brew for, I'm going to guess, about $16.25 a share, which is why the stock's stuck there almost all day long. You got Twilio, a little bit lower on the day. Actually, they closed not too bad, only down 1% on the day. There was a report, Reuters, Bloomberg, something like that. There was a report that WhatsApp is scaling back how much they're using Twilio. And if you look into their financials, just depends on the year. WhatsApp accounts for about 5 to 7% of the overall revenues for Twilio. So that news coming out today, not good news for them, not the end of the world, but certainly a reason for it to be lower on the day. So that's what you got there. I think that's pretty much all we need to cover as far as some of the stocks today. 64.5% of the S&P 500 is above the 50-day moving average, basically unchanged. Remember, it was 64.3 yesterday. So just gives you an idea of how tight and quiet the markets are at these highs. Any little whisper of good or bad news can send this market in either direction, and you watch that volatility pick up real quick. We've seen it before. You know to expect it, so we'll see. It's just a matter of time when it's going to happen. You got 43 new 52-week highs today. That's pretty good. All but 9 of those 42 stocks were positive on the day. It's a lot of the same names just chugging along, just inching to new highs. Microsoft did well today. That's new highs. Apple, same thing. But see how it's just like poked up there, actually closed negative on the day. Some of the semiconductors, KLA 10 core hitting new highs again, although finished flat. NVIDIA also just poked up there. You're getting it. It's not that these are blasting off and you're missing out, and you see on TV like new highs, and you feel like you're missing out. We're just barely budging, little by little, just moving along here. Not even a significant amount. So don't let it frustrate you there. CarMax tried to break out today as well. A little tight pattern up here at highs. It did poke to new 52-week highs. Little bit of extra volume, but not enough to really get it to grab everybody's attention. So still hinting at that breakout. Still looks pretty good, I guess, if you like that sort of thing. Oh, SWKS. Skyworks, they hit new 52-week highs today, though I'm led to believe that they are lower. They reported earnings. Remember, we talked about this yesterday. Let's see, are they lower after hours? About 4% to the downside, around $97. So giving back all of today, all of this week, all of last week almost. Trading now at 97.25, so look for a gap down right about this support area there on Skyworks. But that was one of your 52-week highs, and at the moment down 4.25% on earnings. Also, we talked about healthcare doing really well, continuing to be strong. A lot of the names that are involved in the sort of underpinnings of the strength there, the underlying strength, 0.4% on Celgene today. That's new 52-week highs. Amgen blasted up there, wasn't able to really close very strong, but Amgen's one of the stronger ones in the short term. WellCare also really strong. WCG is the symbol, and Allergan, AGN is the ticker symbol, also hitting new highs as well. Oh, BMY was in there, wasn't it? Yep, BMY also strong. So these are a lot of the names that have just been pushing that momentum in the healthcare space. General Electric also hit new 52-week highs, but getting a little overbought here in the short term. On the downside, you got Occidental Petroleum. Just, it's a tough area right now. Continuing to be weak. Also, I'll mention in a second, actually, but tough area there. But Fossil also moving lower. Got a little bit of a sort of runaway train to the downside there. And Expedia, remember they had earnings the other day. Nothing but weakness since then. 95.66 is where it closed today, down another 3%. I'll point out real quick. Think about if you had a big portfolio, like pick any one of our funds at Jazz Wealth. Or just imagine you're a mutual fund manager and you've got all these stocks in there, right? And or let's make it even better. You're a hedge fund, right? Not in the traditional sense, but you've got this massive portfolio, a lot of great performers, some underperformers, and it's almost the end of the year. What's your strategy, right? Think about this. This is what's happening right now. You've almost got to the end of the year. You've got a lot of taxable gains. You've got some taxable losses. No doubt there's losses in there. Every portfolio has got some positions that are just dragging behind, right? What are you going to do? Are you going to volunteer with about a month and so to go until the end of the year? Are you going to volunteer these capital gains and sell out positions now and have to pay taxes on them coming up here in tax season? Or are you going to sell off your losers and you're going to lock in some capital losses, whatever you can, try to offset some of your gains there and use that, right? There's no way. If the markets stay where they're at, you're just not going to force people to sell profitable positions in taxable accounts. They're going to wait until January and go, okay, now I've been dying to take a profit on this position. I'll take the profit, and if it's X amount of dollars I owe in taxes, now I've got all year plus 5 months into the next, or 4 months into the next year, depending on your structure, till I have to pay the tax. So there's a chance maybe I can make some more money in that year and 4 months. So that's really what's going on under the surface right now. You have to get somebody, you've got to get these people to want to sell their positions if you're trying to get the markets to pull back. Otherwise, everybody, I mean, I'm doing it with clients here. We're looking at their taxable accounts going, let's take some of the losses, offset some of the gains, and then just reapply that money where we can. But you know, why volunteer to pay taxes with such a little bit amount of time left in the rest of the year? So something to think about. You ever think about how people are kind of navigating the markets there? Okay. All right, you got Cisco up 0.5% today. They report earnings tomorrow, right? Yep, after the close tomorrow. So if you like Cisco or own Cisco, here's what you got. Last time, this is funny. The last time they missed on earnings, I was in high school. To give you an idea of how consistent these guys are. 93% of the time they beat on earnings. 89% of the time they beat on revenue. The last time they missed on earnings, I was in high school. Anybody want to guess what year that was? Because, I mean, I know, you know, the shirt makes me look younger and stuff, but, you know, I'm no kid. Last time they missed on revenue was 2013. I was most definitely well out of high school by then. That was the third quarter of 2013. Maybe a tiny little bit of a warning sign there. The third quarter happens to be the worst for them when they report earnings or revenues. They have the most misses in the third quarter, which is what they're reporting tomorrow. But other than that, you got slow and steady in terms of their earnings. They're pretty much right on track. And that doesn't mean that they're like somehow a great company. What it means is analysts have been able to kind of really peg where they should be. It's not that complicated of a business to model financially, and so they just happen to be squeezing out a little bit better performance there. And typically beat on earnings or and revenue there. So that's what you have. You got some of the pot stocks if you're interested. Kronos down 3% today. It's basically flat after hours. Tilray reporting earnings, reported earnings already. Both of them lost more than expected. We talked about this yesterday. There needed to be a surprise. There had to be some kind of surprise from these guys. They didn't have it. They both lost more than expected, both seeing lower margins, both seeing oversupply just in general in the industry, and they're both seeing higher costs. It's unfortunate because you got a lot of people that bought in a lot higher. Ask yourself this too. If you're a hedge fund or you're some sort of investment group and you bought these shares, you fell into that and you own them in the 80s, 70s, whatever, are you more likely to sell those positions before the year end or go sell Microsoft, right? And have the taxable gain like we talked about. So what that means is you've got that pressure to the upside. If there's any little tick higher, you see people beating it down because they're like, I'll take the loss, but I don't have to take as big of a loss, and then I'll go offset it against one of my gains there. So maybe a little bit more than I usually cover, but just trying to point things out. Okay, tomorrow you got Beazer Homes reporting earnings, Cisco, of course, and Network Appliance. NTAP is the ticker symbol. You got two Fed members speaking tomorrow. They continue to be out there just making sure everybody knows rates are good, right? We don't need to move rates any lower. They're just going to keep that momentum going. They sort of do this throughout the whole time here to get you comfortable with that. Everybody's basically expecting rates to be unchanged. And so you got two members speaking there. Okay, dividends. You got WEC Energy, WEC, 59 cents. Mount Zion Bank, 34 cents. You've got TJ Maxx paying out 23 cents. Yeah, that's right. And Duke Realty paying out 24 cents. Sorry. So some of the stocks that we own here at Jazz Wealth and dividends coming your way. I think I covered everything I needed to cover today. How about that? Nailed it. All right, let's see if you have any questions. I'd be happy to take my best shot, see what I can do. Unfortunately, the chat thing is going crazy here, so all the questions you guys have typed are just now coming across the screen. So we'll see what we can do. Yeah, Tesla was in the news after hours, building a new plant out in Berlin. Was it? I didn't catch that one there. Yeah. Maslam guessed it. Yeah, 2000. My last year of high school. I was a class of 2000, 2000. Cool. You got federal student loans at 5.3% in this semester. I don't need, but I can get the same loans at a 3.25%. Would it make sense to take the new loans and pay off the higher interest ones with it? Okay, so you're saying you have the federal student loans, you currently have them at 5.3. You've got the new, you're pinching pennies here, by the way. So your question is, would you, even though you don't need the money, should you go take the loan, pay off the other ones, and have essentially the balance at 3.25%? Can you do that? I mean, can you do that? Yeah, yeah, we'll see why not. Does it make sense to do that? How much money are we talking about here? I mean, are we talking about a couple $1,000s, or are you like getting your PhD or something and, you know, it's a lot of money? That would probably be my question, but can you do that? Yeah, you sure can. Yeah. Yeah. Cool. Let's see here. Since I got a little bit of time there, let me see if I can pull up. So we talked about Cisco, some of the stats there in terms of their beating. Let's see what their, can I pull it up fast enough? I think I can. Let's see if I kept the, yep. Okay, so, well, this one's pretty quiet too. Average gap higher, 0.12%. Average performance for the day, 0.12%. And that's just because of the history that we have. So we're going back so far here. In reality, last quarter, when they reported earnings, the stock gapped down 6.42%. They lowered their guidance, by the way, so that, you know, that's not helpful. When they lower guidance, it's not a pretty picture. The quarter before that, they gapped higher 3.5%. So, you know, you've got volatility in there, but just the average in general doesn't mean it's much of an active time or active stock. Taking it quarter by quarter, yeah, you're looking at an average, you're looking at a gap higher of at least 2.5% across the board. If I'll just read them off going back. Last quarter, gap down 6.5%. Quarter before that, gap higher 3.5%. You never really see double digits, so it's not like a Netflix sort of thing. Last time it gapped higher or lower, in this case lower, was the last time they missed on revenue and lowered their guidance in 2013, like I said. Gapped lower by 12.75%. So you've got some action there. I don't have any read on what everybody's expecting at the moment, but you got a little action there coming up. We'll see. You ever run the numbers to see how the lower income tax from contributing to your 401k could mitigate taxes owed on other taxable accounts? We can inside of Nest Egg. You can certainly do that to see about maybe making the contribution. You're running out of time, but making contributions to the 401k to bring your taxable income down so you can take some taxable gains in the individual account. I would say let's start with the individual account and see what do you have? What can we wash away? What can we offset the gains with maybe some losses in there? Something that's bugging you that you've had that you wanted to maybe close out. We do it automatically here for the individual accounts, but you know, is there something you could wash away there first, given that what do you have? Maybe 2 or 3 pay cycles left until the end of the year, so you can't really make much of a difference in the 401k at this point. Yeah. Cool. You think Philip Morris is going to pull back? Well, so the stock came back to the 200-day moving average, and instead of floating there, this time reversed course immediately. So great support there. You don't expect something like this to all of a sudden become weak again. It's pretty rare for a stock to have a run up, pull back what is most people would consider as pretty aggressively, and immediately erase that. That's giving you a sign that the last big effort was by the bulls. They won the argument there at the 200-day moving average. You wouldn't expect that to just start pulling back right away. And I would argue that if it did, it probably wouldn't be a good sign. So you kind of hope that just continues moving higher. Yep. Sorry about some of these. I don't know. I wonder if it may be the computer. Uranium? No, we don't look at uranium that much, no. You got some? It's like 5K with a pinch of pennies. Well, I mean, some people do that. Yeah. I mean, I don't blame you. You're like, hey, I'm saving a couple dollars. I don't mind saving a couple dollars. If that opportunity is there for you, why not, right? A lot of people wouldn't, you give yourself some credit because a lot of people wouldn't, A, think through that, and a lot of people wouldn't take the time to make it happen. So if you're one of those, you probably do well by your money. You're already off to a good start. I love it. All right, well, I think I nailed everything there today. Kind of a quiet day overall in the markets. We've had a quiet week so far. What can you do? It's what it is. We'll be back tomorrow, of course, to do this all over again, and we'll see you then. I appreciate you guys watching. I appreciate any support that you have there. If you happen to want to hit the subscribe button, I do appreciate it. It only takes a second. It takes us a couple hours to put the show together, so I appreciate all the help and support you'll give. And yeah, enjoy the rest of your day. We'll see you tomorrow.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.